and welcome to our webinar today on making deals in any market with John Schaub. My name is Larissa Greene, and I'm going to turn it over to John in just a second. I want to give you some information about Advanta before we get started. Again, my name is Larissa Greene. I've been with Advanta since 2011, and I do business development, education, and a lot of networking for Advanta. So if you're near one of our local offices, we may have met out and about. And John is actually going to be previewing his upcoming class that he has in April with Peter Fortunato. So he's going to talk a little bit about making deals, and he'll cover how you can join the class in just a moment. Advanta IRA does not provide investment, tax, or legal advice on any investments that you're making. So make sure that when you're looking at a deal, when you're looking at deal structure, that you understand how the rules work, and make sure you understand how the deal is going to work for you. And if you're not sure if this is a good deal, if it's a good return, or how it's structured, it's a good time to get your team involved, get your accountant involved, your attorney, to help you structure that deal. But if you have questions on whether or not it will work within an IRA, that is typically something we can help you understand, and we have classes all the time. They're always no cost, no obligation. You can join us for. Advanta IRA has been in business for a little over 20 years. We have just under $3 billion in assets under management, and we can help anybody nationwide and even worldwide as long as you have a US-based retirement account. So we like to say that we hold the account, you find the investment, and we help you get it done in the name of the retirement account. We only hold private investments, but we don't sell anything at all. We simply hold the account. We give your retirement account a home so that it can retain its tax deferred or tax-free status. And then you're going to put on your entrepreneurial hat and find those investments that you know best, that you want your retirement account to grow with. So that is a little bit about Advanta IRA. Now I'm going to bring on John, and he's going to tell us about himself, his book, and his upcoming class, and give us a little preview of that. Thank you so much for joining me today, John.
It's my pleasure, Larissa, and thank you so much. And your voice is sounding much better, by the way.
Oh, thank you so much.
We've been doing this for a while. I'm in the house business. I buy houses. I rent them to people long term in my market. In the past, I've owned property in 10 states, but I figured out maybe 30 years ago that it was better just to invest in my town. So we consolidated everything into Sarasota, which is my town I've been in most of my life, and manage my own properties. And I'm still in the market. I'm still looking for deals. We still have cash to invest. So my friend Peter Fortunato and I are both active, and we're still teaching. We've been teaching for a while, and we enjoy it. So I hope to either see you at a seminar, or maybe speaking today at the Sarasota RIA, so maybe someplace around town. You know, the people that are new, and when I speak to RIAs, typically I find about half the crowd is new, are concerned, I think, about a lot of things today. You know, our real estate prices are up dramatically from where they were 4 or 5 years ago. I was reading in the Wall Street Journal today that the Austin market went up 60% in just 2 years. And when you have a market that goes up that fast, everybody's concerned about it, and you should be. The Austin market, they say, is down 11%. I don't believe all these numbers sometimes, but there's no question that the real estate markets have slowed down, and perhaps there's some overbuilding in the apartment business. And you know, I see apartment buildings now giving some rent incentives to fill them back up again, and perhaps rents have peaked out. Our rents have gone up dramatically. I've had houses go from $1,500 a month to $3,000 a month for the last 4 or 5 years, and that's a major increase. So it's good to be concerned, but you don't want to just be negative on real estate, because there's always opportunities out there. And that's what this class is all about, is finding opportunities and buying opportunities in any market. And I'll cover a little bit of that today, but there's always opportunities. I wrote a book years ago called Building Wealth One House at a Time, and I just updated it last year. McGraw-Hill published it. And I highly recommend that you start there if you're new in this business, because it lays out the program that I've used now for many years of buying houses. The reason I like houses is they're just a simple answer. They're easier to manage than apartment buildings or duplexes or commercial buildings, and I've owned all of those. You just get fewer phone calls. I manage all my own properties, and I've got several dozen houses, And I've gone now for more than a month without a phone call from any of my tenants. But if I was in the apartment building business and had a dozen apartments, I guarantee you I would have a phone call many times a month. You know, the interaction between the tenants and duplexes and apartments is just different, and they don't stay as long. The house tenants I have, my average house tenant stays about 10 years, and I've had people with me almost 40 years, 35 years now. And that's amazing to me. You wonder why people would stay that long, but the answer is they like the house. They like me as a landlord. The rents are fair. You know, they're not way below the market, but they're fair. I talked to somebody yesterday that lives in a house, not one of my houses, but they've been renting from a landlord who's an out-of-town landlord. Landlords in Dallas, Texas, and the houses here in Florida, they haven't raised their rent in 7 years. These people will never move if they don't raise their rent. But think of all the money that landlord is giving away by not raising their rent for 7 years. And the reason I mention that is there's landlords like that everywhere. And I think one of the opportunities today is landlords who have been in a business for years and years and years, own good properties, and now they want to get out. They want to retire, but they don't want to just take the cash and put it in the bank because then they have to pay a bunch of taxes. They would rather keep the property and have somebody else manage it. And Pete and I will talk about this in the class, but it's an excellent opportunity for you to get involved, even if you're just getting started in management at a very low level on somebody else's nickel. If you just manage one house for somebody else, and anybody can do that, and it's good that you'll learn a little bit about management. And I encourage you to read the book. I talk about management in the book. But if you learn how to manage people, the property is easy to manage. Something breaks, you simply hire somebody to fix it. But people are more difficult. So tenant selection, tenant management, getting those tenants on your team, and we see our tenants as team players, makes all the difference in the world. It just makes your life better. So we switched to houses because of a quality of life issue. I didn't want to be on the phone 24/7 or on call 24/7, taking care of tenants. So, you know, if I get a dozen tenant calls a year, that's a lot for me. And most of the time it's something mechanical wrong, you know, needs a roof, needs an air conditioner, needs a plumber. And we delegate some of that to the tenants and we give them incentives to take care of their own property. But by them seeing us as being on the same team as them and being a good landlord, a responsible landlord, that's kind of what a good tenant wants. A good tenant's biggest fear really is that we'll sell the property out from underneath them. So when I rent to somebody, I let them know that they can stay long term. We're not flippers. We're not going to sell this property in 6 months. We hold on to the property as long as they want to stay there. And there may be an end to that, but probably when I retire, I think probably one of my family members will take over our portfolio. And the same tenants that have been there for 35 years might stay another 10. Who knows? So one thing is we talked about is prices going up and leveling off, but interest rates going up is made people nervous too. And you know, because I've been in business for a while, I've seen interest rates much higher than they are today. In fact, I don't remember getting many 7 or 8% loans. Most of my loans were 9 or 10%. I bought a bunch of houses back in the 80s that had 14% loans, and we still have those houses. So the question is, how do you do that? How do you buy a house with an 8% loan or a 10% loan or a 14% loan and make money? And the answer is you have to have an exit strategy. You have to have a strategy in place to pay that debt off, replace that debt with an investor. And most of my deals over the years, especially when I was starting, because when I had a good deal when I was starting, I would have to go find somebody else who had the money to buy that good deal. I didn't have the money in the bank. And unfortunately, or maybe fortunately, I wasn't able to go out and get a bank loan because I didn't have a lot of money in the bank. I didn't have a steady job. I had a real estate license right out of college, so I was making some money selling real estate, but it wasn't steady. And banks like steady income. They also like a secondary method of repayment in case you couldn't make the payment. So banks were not my sources of financing to start with, which turned out to be a good thing because over the years I learned how to buy properties without banks, and that's allowed me to buy properties when nobody else could buy them. Banks lend to investors during good times, but when times get tight, and we're kind of going that direction, when times get tight, the credit market gets tighter. And right now, the problem the banks have is they have loans on apartment buildings and on commercial buildings that have dropped in value. So they loan, just to use a round number, they loan somebody $10 million and is on a 3-year renewable loan, but the property is now worth $5 million, it's not worth $10 million anymore, and they don't want to renew that loan, or they won't renew that loan. So now you've got a property owner in distress. Well, we saw a lot of that in the residential market 10, 12 years ago. Not going to see much of it this time, I don't think, because people who bought in the last few years have great loans. You know, my kids all bought houses and they have 3% and 4% loans. Those are great loans. Nobody's going to walk away from that. Nobody's going to get behind their payments with that kind of low payment. But the people who are speculating today, and there's quite a bit of speculation going on where people will buy a house and they'll put a higher interest rate loan on it, hoping they can resell it for a profit. Those lenders will have a problem. So I'll talk quite a bit, and so will Pete, about buying not only houses, but helping lenders who are in trouble get out of those loans in such a way that the lender can save face sometimes, and that you as the investor can make a significant profit. During the last downturn, we made a lot of money by buying loans that were in default at deep discounts, and I think we'll see that happen again. Other people are concerned about maybe rent controls and some of the new regulations that seem to be coming down the pike. And of course, people have been talking about rent controls. You can go back 100 years, people are talking about rent controls. So it's not a new concept, but the long-term effect of rent controls is generally increased property prices. And we can see this in places like New York and some places in California that have had rent controls for a long time. The state of California recently passed rent control ordinance, and it said the maximum that landlords could raise their rents is 10% a year. And it went on to say, or the higher of 10% a year, or 5% plus the cost of living in your county. Well, if you think about those numbers for a second, I've been a landlord for a long time. I rarely raise my rents 10% a year. But if we had a law that said that's the most you could raise them, and let's just say, for the sake of argument, that the 5% plus the cost of living was equal to 10% also. So what do you think landlords will do? Well, I suspect that a lot of landlords are going to raise their rents 10%, who normally maybe only raise them 5%. So these rent control ordinances are not well thought, and there's unintended consequences. And one is, of course, long-term is if they pass a law that says you can't raise your rents at all, people would stop investing in property. They'd stop building new investment properties or new rentals, and you don't see that happening. There's still a lot of new construction going on. So I don't see that as a long-term problem. You know, if you think about New York City, my daughter lived up there for years, and I got pretty familiar with that market. Prices keep going up. Now they've come down recently because of the COVID and the fact that people are working remotely. They're working out of their houses, and that has been a bad thing for the office building business. But it's been a pretty good thing for people to have invested in houses, because our houses have gone up so much. The other opportunity you might see is you know, over the last few years, short-term rentals, vacation rentals, VRBO rentals have been very popular. And I think, I'm not sure the reason for this, but it seems like maybe we have an oversupply of those rentals now. I have a good friend who just bought one from a fella, again, an out-of-town owner, and he bought it at a nice price with really good terms, because the guy had this VRBO, really nice house, furnished perfectly, good location, but he wasn't renting it as often as he thought he would. And of course, there is some maintenance required and some management required. Somebody's got to rent that house, and somebody's got to clean it and take care of things that are broken. In my mind, short-term rental is a little bit like commercial rentals. You know, my office where I have been for years and years and years is owned by a good friend of mine, and we actually share office space there. But it's also occupied by a number of doctors. Well, those doctors have no patience at all when something breaks. You know, if the air conditioning is not working, if there's a plumbing stop up, if anything is going wrong in that office during business hours, they want it fixed right now. They don't want to shut down, because they might be doing surgery. You know, one's a dentist, one's a plastic surgeon, another one's a hearing doctor. They might be doing surgery, or they're losing money. They have staff they have to send home if they don't have air conditioning. So if you're in a business like short-term rentals or commercial rentals that people are very demanding and they're paying you more rent, I mean, there's higher rent involved in all those kind of properties, but the tenants are very demanding, and rightly so. You know, if you're running a business and you have 10 employees working for you and you don't have air conditioning that day and it's in Florida, you're out of business for that day. So they, you know, you're in the emergency management business, and I don't want to be in that business. The other thing we'll talk about is insurance. Insurance prices have gone up, and there's strategies you can use to keep your insurance costs lower. I've written a lot about this. Our average cost is pretty low. We self-insure a number of things. We buy properties that don't require a lot of insurance. So all those things, if you're thoughtful about what you buy and how you buy it, you can keep your insurance costs low. Our insurance costs are higher, but they're still relatively low. And because we manage that and we do that on purpose. There's a lot of, I talked to somebody this week that's involved in an investor deal with a couple other investors. And I'm going to talk in a seminar about a lot of the investor strategies that I've used over years, and they work really well. I've never had an investor have a bad experience with me. We've always made money. And because of that, you know, they tend to talk about it. You know, if you have an investor in a property with you and they make a nice profit, they're likely to share that information with other friends they know. I did a talk one time for our local dental society, and I explained how we buy houses, why we buy houses, how we manage houses. You know, and dentists are really busy and they make good money. So a couple of them came up to me afterwards and they said, John, we don't want to do all that. That's a lot of work to buy a house and to manage it. And, you know, we're believing what they've read about, you know, the toilet plugs up in the middle of the night, so you've got to go out and fix it. Well, I can tell you, in all my years as a landlording, I've never unplugged a toilet. We put in our rental contracts that if they plug up any kind of plumbing, it's their responsibility. So the tenants get to call any plumber they want and pay the plumber. We don't do that because they plugged it up. We didn't plug it up. So you hear stories like that from people who are trying to sell you something or scare you, but you can manage a property without ever working more than 9 to 5. You know, I don't work nights or weekends, never have. Don't respond to things, and you know, the way we manage is probably different than the way most people manage, but we delegate responsibility to our tenants. They know who we are, they know what their authority is, what they can do, and they know when they have to call us. And if there's an emergency, and we can go years and years and years without an emergency, but if there isn't a real emergency, tell them to call 911. You know, if the house is on fire, don't call me, call 911. We give them a list of people to call in an emergency situation. So if they had an electrical emergency, they have a number of an electrician they can call directly. They don't need to call me. If they have a plumbing emergency, they have the name of a plumber they can call. They don't need to call me. But if it's just kind of normal maintenance, then we're going to ask them not to call me. I've been saying call me. They don't have my phone number, so they can't call me. But they could email me. And I get all my tenants to email me because we found that that's a much better system than talking to tenants. You don't really want to talk to a tenant that's having an emergency because they're going to be all excited. And I can remember years ago, I had an answering service. I'll tell you how long ago it was before we had cell phones. The tenant called in to my answering service and said, we have an emergency. The lady on the other end said, what's the emergency? She said, well, my oven won't work and I can't cook dinner. Well, I don't think that's an emergency. And the lady who had answered the phone didn't think it was an emergency, but she passed that information on to me. And this is on a Friday afternoon. Funny thing about being a landlord, it seems like if you just worked one afternoon a week, Friday afternoon, that's when most of your calls would come in. Well, see, so I found out about it, but I didn't call her back because an oven not working is not an emergency. It wasn't on fire, it just wasn't heating up. So I called them back on Monday or emailed them back. I probably called them back then because this is before we had email, and said, I'm sorry about your oven. And she said, oh, it wasn't a big deal. My husband went down to Home Depot and bought a part and fixed it. I said, nice. You know, that's exactly the response I want from a tenant. I want them to be somewhat self-sufficient. And that's a significant difference between a house tenant and a commercial tenant or a an apartment tenant or a duplex tenant. Those people are not likely to fix much. In fact, they're likely to unfix things. You know, when an apartment tenant moves out, I can remember those days that we almost always had to go back in and do some significant work, you know, replace carpet, repaint, fix things they broke. Apartment tenants are rough on property because they're short-term people. You know, they're thinking short-term, they're not thinking long-term. So I want to rent to somebody who's thinking long-term, who values the house. And we have nice houses in nice neighborhoods. I learned a long time ago that I want to own as few properties as possible. You know, I didn't want to own 100 houses. And at one point, I kind of thought I did want to own 100 houses. But as I kept buying more and more houses, I sat down with myself and said, why? Why are we buying more houses? Maybe we could make just as much money with fewer houses that were better locations, you know, that were a little more valuable, not because they were bigger houses or fancier houses, but that they were just better located. So we started buying better and better locations. And interestingly enough, you know, we know that what's going up in value really is the land under these houses, just as much as the house itself. Most houses are just getting older and wearing out, but if there are neighborhoods that are appreciating, that means the lots are appreciating. So we kept buying on better and better lots. And today we own a third as many properties as we used to own, but they're all in really good neighborhoods. And we've had better than average appreciation. You know, you may not, you don't, when we talk about averages, you don't really want the average tenant. You don't want the average house. You don't want the average neighborhood. You don't want the average loan. You want to do better than average in all those categories. And you can do better than average if you're thoughtful, if you study, if you just do things that improve what you do. You know, some people, and I can remember when I got out of college years ago, I thought I will never read another book or take another class again. I was done with studying because I knew just all I needed to know, I thought. And then I got out in the real world and I learned that I didn't know much at all. I knew something about, you know, arithmetic and grammar and history. And I took all the real estate courses in college. So I thought I knew something about real estate. But once I got into business and started buying and managing properties, I found out how much I didn't learn or didn't know. So I encourage you to continue to learn. And I've been playing tennis most of my life. I played on a high school tennis team. I wasn't any good, but I played there. And this morning when I got up at 8:30, guess what I did? I went out and took a tennis lesson. I'm still taking tennis lessons after decades and decades of playing tennis. And the reason for that is I learn something every time I take a lesson, because I take a lesson from the best pro in town. If you're going to take a lesson in real estate, make sure you're taking it from somebody who really knows their business, who has done it. And Peter and I don't want to brag here, but Peter and I have been doing this and teaching people how to do it right for years and years. So if you get a chance to come to our seminar in Tampa, I highly recommend it. I can't guarantee you we'll teach it again, but this class is designed to help people of all levels. So we'll do a good job. I guarantee you'll have a good time. And the people that attend these seminars generally are very successful investors. There's a range. You know, if we have 100 people in a room, maybe 40 or 50 of them will be fairly new investors, but there'll be a couple dozen of them there that have owned property for 10 or 20 or 30 years. And we've had many students go out and buy much more property than we ever did because they were more ambitious. And as I said before, I'm more lifestyle oriented. I enjoy doing a lot of things. I have 3 children and 5 grandchildren. We spend a lot of time with them. I play tennis, golf, sail, fly my plane around. You know, there's a lot of things I do that, first of all, are pretty expensive. So it motivates me to make money. But second of all, they're fun. So if you're going to be in a real estate investing business, you want to have goals, hopefully, that will allow you to do something that is very meaningful to you. Doesn't have to necessarily be just happy all the time, but meaningful to you. You know, probably help your children, help your grandchildren, travel, do whatever you want to do to really make the most out of your life. So we'll talk a little bit about getting the next generation involved, and you may be the next generation. You know, your parents may be in the real estate business. I've had many children of my students come through the class over the years because they wanted to understand what their parents were doing, you know, how they had this lifestyle that they had. You know, why don't they have a job? Why don't they work 40 hours a week like everybody else? And if you're in the real estate, you can work 40 hours a week if you want to, but you get to choose how much you work, when you work, what you do. And the more you learn and the better you get at it, the more you can do with few hours involved. Most of the big decisions we make don't take a lot of time, because when we see a deal that we know is a good deal, know that it's a good deal, we don't have to analyze it. We know it's a good deal and we buy it. So you want to get to that point. You want to get to that point where you don't have to analyze things for hours or days before you make an offer. You want to be able to see a good deal and recognize why it's a good deal, why it's a safe deal, and how to make it safe for you. And a simple way to make it safe for you is not to invest a lot of money in any one deal. I've always had a rule of thumb and never put more than 10% in any deal. And if you read my book, I talk about a rule I call 10, 10, and 10, which is never more than 10% down, never more than 10% interest, which people thought it was kind of a high number over the last couple of years, but now they see that they know other folks that are paying more than 10% interest, and that's a mistake. And then, you want to hold a property until it at least doubles in value. By doing that, you're not working for just small change. People that buy and sell a house and make a little bit of money, then pay taxes, and now have to go out and do it again. Really, or operating a business is sort of like a job, and our strategy is totally different. Our strategy is, when we buy a property, is to hold it until it doubles in value. So today, if I buy a house, and my typical houses are worth between $400,000 and $500,000, if I bought a house today for $400,000, I'd hold it until it made me a $400,000 profit. Sometimes it takes 5 years, sometimes it takes longer. But $400,000 profit is so much better for you than making a bunch of smaller profits that you have to pay taxes on. So that's kind of a summation. But this dealing with the next generation, whether you're the next generation or you're the generation that's going to try to pass some properties down to your children and grandchildren, it is a really interesting topic, because there's a right and a wrong way to do it. When I first started investing, my parents didn't have a lot of money, but I found some investors who had money. They don't like real estate, but their children didn't like real estate. These investors are very frustrated, of course, because their kids would not get involved in the business with them. But when I found them, I was willing to get involved with them, and I would do the work. I would go out and find properties that we could buy. I would agree to manage the properties, and we simply split the profits 50-50, and they would put up all the money. Well, that's a formula that I've used for years and years. I've been teaching other people to use it for years and years. It's simple, but the incentives are in the right place, because if we don't make any money, I don't make a profit. I don't get paid. So we'll go into a lot more detail about how to do that. But learning how to invest with other people is a terrific skill. You first have to know what you're doing. You have to be able to buy something and make a profit with it. You have to be able to manage it long enough for it to double in value. But if you learn how to do those things, and you will have unlimited opportunity, because there's always people that need to sell, and there's always investors who would like to invest with you. So that pretty well wraps it up, I think. Our class in Tampa will be 9 to 5 both days. We'll have a question and answer session after class on Saturday, and that's a really important part of the class, because people have all sorts of questions. We can answer them. We'll give you real answers. Peter and I are hard to stump. We've been involved in so many deals in so many different kinds of markets that we really understand not necessarily what the future is going to bring, but how to make money in today's market. So that's really the focus of our class, is how to make money, how to make deals in any market, but especially the market today and what we anticipate here for the balance of this year and next year. So I hope you can attend. My book, Building Wealth One House at a Time, is available on Amazon.com. If you don't know me, or you are just getting started in this business, I would certainly recommend that you read that book. It's an easy book to read. When I wrote it, I really wrote it for my children. I wanted them to understand exactly what I was doing, but we've helped well over 100,000 people with that book. So it's a very popular book, and I guarantee you will enjoy it. Money back guarantee. So I want to thank Larissa and thank Advanta for helping us promote this class, and encourage you, if you don't have an IRA, if you don't have a Roth account set up, really make that a goal to do short term. You can look at it just as a kind of a personal savings account, a Roth, especially for a while, because you're not going to put a lot of money in there, but you always have access to the money you put in. It's tax-free. Your profits will grow tax-free. And once you learn how to invest in real estate, those profits can be significant. I'm talking about many, many, many zeros behind it. And if you can make several $1 million in your Roth and it's tax-free when you take it out, you've done something very, very wise. So, Larissa, thank you. I look forward to meeting many people on this Zoom call. And if you have any questions, my email address is schaubrealestate@gmail.com. So my last name, Schaub, and then realestate@gmail.com. Feel free to email me and I'll respond as soon as I can. Thank you.
Thank you so much, John. And just as a reminder, I have the QR code here up on the screen that will get you right to John's website so you can learn more about the book and the upcoming class. The class is going to be April 13th and 14th. Again, johnschaub.com, or use this QR code to access information. Thank you so much, John. I appreciate it. Take care.